Hello, friends. Something is changing inside your Social Security check in July 2026, and the Social Security Administration has not sent a single letter about it. Not a notice, not an email, not a phone call. For some people, this change means more money arriving automatically without doing anything. For others, it means a reduction they won't see coming until the check is already smaller. And for a third group, it means a deadline is opening right now that will close quietly before most people even realize it existed. Today, I'm going to tell you exactly what is changing, which group you fall into, and what, if anything, you need to do before July arrives. This is not a rumor. These are confirmed policy updates, and I'm going to walk through each one clearly. Before we get into it, if you are not subscribed to this channel, please do that right now and turn on the bell notification. Here is why it genuinely matters. The Social Security Administration changes rules constantly. Benefit adjustments, earnings thresholds, Medicare deductions, overpayment policies. When those changes happen, they do not explain them to you personally. They update the policy and assume you already know. What I do here is take every one of those changes, break it down by what it actually means for your specific situation, and get it to you before the deadlines pass and before the mistakes are already made. The people who are subscribed here find out in time to act. The ones who are not tend to find out after the wrong decision, after the window closed, after the money is already gone. Hit subscribe, turn on the bell, and let's get into what's changing in July. Change number 1 affects when your check actually arrives, not the amount, the date. Social Security pays on a staggered Wednesday schedule based on your birthday. If your birthday falls between the 1st and 10th of the month, you are paid on the 2nd Wednesday. Between the 11th and 20th, the 3rd Wednesday. Between the 21st and 31st, the 4th Wednesday. In July 2026, 2 of those payment dates land differently than they have in recent months. Because of how the calendar falls, specifically, the 2nd and 3rd Wednesday payments in July shift by a full week compared to where recipients may have expected them based on June's schedule. Why does this matter? Because millions of seniors set up automatic bill payments, rent, utilities, insurance premiums, timed around their expected deposit date. If your check arrives 6 days later than you planned for, and your automatic payment goes out on the date you budgeted around, you may be looking at an overdraft fee or a late payment flag on your account. The fix is simple, but it requires you to act now, not in late June. Go to ssa.gov, log into your My Social Security account, and look at the exact payment dates listed for July 2026. Then compare those dates against any automatic payments you have scheduled. If there is a gap, if your bill goes out before your deposit arrives, contact your bank or your biller now to shift that payment date by 1 week. This is a zero-cost fix that takes 1 phone call, but only if you know to make it before July, not after the overdraft already hit. Change number 2 affects people who are collecting Social Security before their full retirement age and are still working. There is a rule called the earnings test. In 2026, if you are collecting benefits before your full retirement age, and you earn more than $23,400 in a calendar year, the SSA withholds $1 from your benefit for every $2 you earn over that limit. Here is what changes in July. The earnings test runs on a calendar year, January through December. By July, anyone who was going to hit that $23,400 threshold for 2026 has likely already hit it, or is about to. And many people in this situation do not know that SSA may begin withholding from their check mid-year without warning. What that looks like in practice, your check arrives in July, and it is smaller than it was in June. No letter explains why, no advance notice. The SSA begins the withholding and expects you to already understand that the earnings test applies to you. If you are working and collecting before full retirement age, calculate where you stand right now. Add up your gross earned income from January through today. If you are approaching $23,400, you need to understand that your July or August payment may be reduced, and that this is not an error. It is the earnings test being applied. There is a genuinely important piece of good news here, and I want to make sure you hear it clearly. The money withheld is not gone. Once you reach your full retirement age, The SSA recalculates your benefit and credits back every dollar that was withheld. Your monthly check gets permanently adjusted upward to reflect the months that were withheld. The money comes back, but only if you know to expect it and know to verify that the credit was applied correctly. When you reach full retirement age, call SSA at 1-800-772-1213 or log into your My Social Security account to verify your current withholding status before July. If you have any doubt about where you stand, change number 3 is the one that directly affects the size of your monthly deposit, and it involves Medicare. Medicare Part B premiums are deducted directly from your Social Security check before you ever see it. In 2026, the standard Part B premium is $185 per month. That comes out automatically. What many recipients do not know is that the Part B premium can change mid-year for specific groups, particularly people who had income changes, experienced a qualifying life event, or are being affected by a delayed IRMA determination. IRMA, the Income-Related Monthly Adjustment Amount, is a surcharge that Medicare adds on top of the standard $185 premium if your income from 2 years ago was above certain thresholds. These surcharges range from an additional $70 to nearly $500 per month, per person, deducted automatically. In July 2026, a batch of delayed IRMAA determinations from 2024 income data are being finalized. If your 2024 income was above $103,000 as a single filer, or $206,000 as a married couple filing jointly, and you have not already received an IRMAA notice, that notice may be coming in June or arriving with a July deduction you were not expecting. Here is the critically important part. If your income dropped significantly after 2024, you retired, you sold a property, and that was a one-time event, your spouse passed away, you experienced any major income reduction, you have the right to appeal the IRMAA surcharge using a form called SSA 44. You have 60 days from receiving the IRMAA notice to file that appeal. If that window closes, you wait until the next annual recalculation. For a surcharge of $200 to $500 per month, that delay costs you real money every single month it goes unaddressed. Download Form SSA 44 at ssa.gov right now if any of this applies to you. Do not wait for the July check to be smaller before you act. Now here is the change in July that is actually an opportunity, and it is one that most people on Social Security do not know exists. Every year, there is a window during which certain Medicare beneficiaries can make changes to their coverage outside of the standard open enrollment period. For people who qualify based on income or a change in circumstance, a special enrollment period can open, and July is when several of these windows activate for 2026. Specifically, if you are on Medicare and your income has dropped low enough to qualify for a Medicare savings program, the programs that pay your Part B premium entirely on your behalf, July is one of the most favorable months to apply because mid-year approvals often take effect within 30 days and can result in a refund of premiums already paid in 2026. If you are single with income under approximately $1,660 per month, or married with household income under approximately $2,239 per month, you may qualify for a Medicare savings program that eliminates your $185 monthly Part B premium entirely. That is $2,220 back in your pocket every year. Not a discount, a complete elimination of that charge. To apply, contact your state Medicaid office or call 1-800-MEDICARE. Ask specifically about the Qualified Medicare Beneficiary Program, QMB, and whether a mid-year application qualifies you for retroactive premium relief in 2026. Some states allow it, some do not, but the only way to find out is to ask. So here is the full picture of what is changing in July 2026 and what to do about it. First, check your exact Social Security payment date for July, ssa.gov, and compare it against any automatic bills you have scheduled. A shifted payment date combined with an auto payment can create an overdraft you did not see coming. Second, if you are working and collecting before full retirement age, calculate where your earned income stands against the $23,400 earnings test threshold for 2026. If you are close or over, your July check may be reduced. That withheld money is not lost. It comes back at full retirement age, but you need to know it is happening. Third, if your 2024 income was above $103,000 as a single filer, watch for an IRMAA surcharge notice. If your income has dropped since then, file Form SSA 44 immediately. You have 60 days from the notice to appeal and potentially eliminate that surcharge. And fourth, if your income is under approximately $1,660 per month as a single person, July is a strong month to apply for a Medicare savings program that can eliminate your Part B premium entirely and potentially refund premiums already paid this year. Subscribe and share this with someone you know who is on Social Security or Medicare. One conversation could change their July entirely. I will see you in the next one.